So yeah, beautiful people, it's your mentor, Dumelo JPY here, and welcome to another session with me where we are going to be discussing the art of risk management, right? But before we start with today's session, just make sure that you get yourself a copy of your red print. Don't forget that the red print is a trading solution built to help traders to break barriers, maximize their profits, and elevate their trading journey, right? By simply building their own systems, right? We have two packages at the moment for $170, which is the red print um trading solution is the combination of everything. And then this one is only for the trading room. It also comes with the psychological risk management side of things, right? In terms of the courses. But this one, you get access to the mentorship, the one-on-one sessions with me, access to Discord, Zoom sessions, and other quality features, right? So make sure that you click the link below in the description section, you view the page, you get the program that you'd like to pay for, and then from there, um, press start now, send you directly to my WhatsApp, and then send you the banking details, and then we'll start working from then. Other than that, please make sure that you like this video, subscribe, hit the notification bell so that when I drop, you can be notified. And let's get it, my good people. So yeah, beautiful people, it's your mentor, Tumelo JPY here, and welcome to today's session where we are going to be talking about risk management, one of the key components that plays a significant role on your trading life. So previously, we've dealt with the strategy. Now, we are going to be dealing with the risk management side of things, how you as a trader, can build yourself your risk management plan so that you can be able to, profit from the market. Note that I'm not going to be going deep into explaining the whole risk management chapter because of some individual paid me for this exclusive information. So yeah, I'm just gonna be showing you guys the things that you need to do. So previously we spoke about building a progressive system, and we've actually touched the chapter where we inside that chapter we spoke about risk management. That for you as a trader to grow, to build, to design, and to be able to obtain consistent results, you need to have a risk management plan, right? So just to explain what risk management is, it refers to a set of principles and techniques designed to minimize losses and protect your trading account, right? Each and every single investor or trader's first priority is to protect their trading capital, right? So there is a technique that a trader needs to use for them to do what? To protect their capital, right? Because nobody would want to fund their account to lose their fund. You wouldn't fund a company even so that the company can just take your money and leave, right? Your goal is to make sure that you protect your capital and you make more money. Hence why everyone, mentor and any other individual, they'll always tell you that keep your losses small and your profits huge, right? Risk can only be managed when one builds a progressive system. Ladies and gentlemen, each and every single thing that you're going to be doing, it needs its own progressive system, right? Strategy, you need to have a technique, which is a progressive system on how to implement the strategy. Risk management, there's a strategy for you to implement your risk management plan. Your trading psychology, there's the way for you to approach the psychological part of trading. If you want to scale up your trading account from making a specific amount of capital to making a specific amount of capital, from shifting from making this amount of capital to making this amount of capital, you need a technique or a system, right? So I just want us to talk about these two types of traders here. So trader A and trader B. But firstly, let's start with trader B. What we can see from trader B is that this is an individual who trades randomly and any setup, meaning that each and every single setup that present themselves in front of them, they are willing to take it. Whether it's an A setup, B setup, C setup, whatever setup, as long as it looks like a setup to them, they are willing to take it. One of the key reasons why most of you guys are not profiting from the market is that any setup is any quality setup, right? Meaning that you haven't yet looked for a pattern that repeats itself and it has a high win rate, and then you use it as your main setup, right? So try working around that. Number two, their main objective is to get rich, right? Meaning that there isn't really a plan. You see a setup, you trade that setup, whatever amount of money you're gonna make, you're gonna take a screenshot of it, upload it on social media, or you're gonna collect that amount of capital and then move, right? So your goal is just to make money and leave. You don't have some sort of a solid plan behind whatever that you're doing, right? And then Another one is the trades are based on emotions, right? For example, find the trader, taking three trades, right? And then all three trades at the same time. The setup, like I said, the model or the pattern, it's an A setup, but it's taking three back-to-back losses, right? Now they start doing things like over trading, they start reducing their account size or they start reducing their risk because of they're afraid of losing their capital. That's fear presenting itself. Right. So the trader B is an individual who does that. And then there's no risk involved. Ladies and gentlemen, if you are a trader out there around the world and you find yourself doing the following things, you trade your account with different lot sizes, you trade your account with different capitals, meaning that today you're funding $100, the next day you're funding $300, the other day you're trading. Nah, that's not how this whole thing is gonna work. So if you find yourself being trader B, note that you have the lowest chances of profiting within the market. Right. If I have mentioned something that you are actually suffering from in trader B, just know that you fall under the guys that have the lowest chances of doing what profiting within the markets, right? Now, let's talk about what a complete a what a complete trader looks like, right? What a complete trader looks like, right? So a complete trader, for someone to be considered as a complete trader, what is it that they do? Trades with a plan and execute without making any form of error. Like I said, our main objective as traders is to build a system. After building that system, we implement and execute that system without making any form of error, right? Which means we don't want anything that has to do with emotions. We don't want anything that has to do with us thinking or any form of traders' common errors, right? We want to invest our time in implementing the system to its fullest potential so that we can be able to obtain the results that we are looking for, right? And then they trade with a probabilistic mindset, right? Probabilistic mindset, it's numerical in a way. It's mathematics. It's basically understanding that even if you take five trades and all five trades are a loss, if you win two trades, you can be able to recover those amount of losses, right? So this thing in a way helps us to eliminate emotions such as fear, FOMO, and other things, right? Because of why are you supposed to be afraid if probabilities show that at the end of the day, you have the highest chances of actually profiting? Those of you guys that are watching football, those of you guys that are betting, you know that if the odds are high, this means that the team has more chances of winning, right? It's like what, um, let me see a basic thing. Kaiser Chiefs versus Orlando Pirates. The odds are gonna say that Orlando Pirates is gonna win because of Orlando Pirates is a big club, right? Real Madrid versus Barcelona. I don't know who's gonna win at that time, but the odds will say that Real Madrid can win or Barcelona can win because of Barcelona is at this prime right now, right? It's that. Why are you supposed to be having fear if the numbers are on your side? Right. Another thing that is very crucial is they record their trades and elevate, then record their trades, then evaluate, analyze, and design solutions, right? Meaning that professional and consistent traders, what they do as individuals is this, they invest most of their time in implementing their system, believing also that trading is more of a probabilistic, it also needs a probabilistic mindset. And also, after implementing their system, they record each and every single thing they've done. So when it comes to the recording of data, you either use your book, the normal book that you get from your retail stores, or you can get a Notion. There's a book called Notion. There's an app called Notion. You can look for Notion on your, I don't know, App Store or whatever. Anything that you can use to have a record of each and every single trade that was executed, right? You need to do that. Why? Because of, like I said, trading is quite simple. I'm not even gonna come here and lie to you. This thing is straightforward. If you know when you made most of your profits, then leave any other things and go focus on that area, modify it, get it right, and then just keep making money. Hence why I keep telling everyone that the way you are viewing profitability from a wrong perspective. It's just that pattern appearing within the market, you making money out of that pattern several times, and you strictly focusing on that pattern over and over again, right? But with a record, or a track record, that trader will be able to see that, okay, oh, I made most of my money around the Asian session, so I need to invest my time around the Asian session, right? I lost most of my money because of what? The following things. So the best thing that I can do is to do this and this and that. So those are some of the things that you as an individual need. Hence why we say that you evaluate and analyze. Analyzing is you track having that track record, reviewing it, writing notes, taking notes out of it, right? And then you design a solution so that you can be able to grow in the near future. right? And then they have a scale up and scaling down on their trading account, meaning that what they do is this. If you trade, right, you need to have the normal plan, a basic plan on how you're going to be trading that account. Now, there needs to reach a time where after journaling, you'll see whether your trading account is going up or down, right? If your trading account is going up and then you are consistently implementing your system without making any form of error, this definitely means that you have the higher chances of doing what? Scaling up your trading account. But you can't just randomly scale up your trading account. There has to be a technique or a solution or a system that you use to um, implement so that you can be able to do what? Grow your trading account, right? You can either use that by increasing the account size or reducing your stop loss and increasing the loss size, right? But then at the same time, the main objective here is not for you to make a radical or a rational increase on your trading account. What you want to do is to build this thing step by step because of you'll be faced with new losses, new mistakes, and new things. You don't want to panic when you are scaling up your account. You want to be comfortable so that whatever that you do, you can do it effortlessly. But now imagine you are scaling from funding $1,000, opening at one lot, and then you fund 2,000 and then you are moving straight to five lot. That loss, eventually when you open your trade, is going to be able to trigger you. The amount of money that you're going to be seeing once you're in profit is going to trigger you to a point where you won't even want to hit your take profit. You'd want to close that $600, $800 because of it's a lot for you at that time. It's a lot of money that you have plans for. But when you scale up step by step, you get to see that, oh man, I've made $300. I'm comfortable with that. Let me go to 500. I'm comfortable with that. 700. I'm comfortable with that. But with the bigger lot, what you do is you are going to find yourself in a situation where everything is scattered, right? Today you're taking this, tomorrow you are this. When trade is on a loss, you want to close. You are always panicking. This means that you as an individual now, you need to invest your time in building what? A proper scaling up and scaling down plan. Same thing with you being at the top. You are trading a profit account, you are making $10,000, and then you start taking losses. And then your journal tells you that, okay, listen, man, your pattern is currently working, but it's not working at its fullest potential. What is the best thing that we can do? The right thing that you can do as an individual right now is to make sure that you scale down your account. You scale down your account by decreasing the lot size, by decreasing the risk, those types of things, looking at those factors, right? And then from there, you start constantly recovering the account. After recovering the account, that's when you can start doing what? Increasing your lot. After you have confidently implemented your system without making any form of trading errors. So if you want to be this type of individual, make sure that you stick around on this video and then let's get to discuss some of the things that you need as an individual. So this is the risk management. So the risk management plan consists of several things. I've already touched base on some of these things, but we're just gonna be going through them again. The first one is a trading plan. A trading plan is a structured and detailed blueprint that outlines how a trader will approach the financial market, right? It's a blueprint. At this moment, we're using a red print. It's a red print designed with a structure and fully detailed on how you as an individual you're going to be approaching the market. Why are most traders failing to become profitable? It is because of they approach the market from a random perspective, right? You don't have a plan. You just wake up in the morning, you see a setup, you take it. You don't have anything built to confirm that this setup is a right setup. This slot is the one that I'm going to use. This is the pair I'm going to be trading, right? You just do things for the sake of doing them, right? It defines the rules, strategies, guideline a trader follows to manage risk, identify trades opportunities, and making the decision making, right? In terms of decision making, one thing I can tell you about this thing is this. For you to grow as an individual, right, you need to make proper trading decisions. But if you make rational decisions, irrational decisions, I mean to say, what you're gonna do is you either find yourself in a situation where you hold your losses more and profits less. You're gonna find yourself doing all these types of different things that are going to hinder you from profiting from the market. So with a plan, you get to actually do what? Follow it and do exactly as it tells you to do, right? Which means you are more of a middleman. Let me be honest with you. You are more of a middleman here. You just do what the plan tells you to do, and then you will eventually become profitable. A good trading plan helps remove emotions from trading and increases consistency. That's actually a fact. Like I said, instead of you holding your losses more and your profits less, now you get to hold your trades that are in profits more, and then you cut your losses when you're running on a loss. Right, which means it's not emotional based. Because some of you guys take setups because of you're happy. I don't know. Why do you guys normally do that? Find that you are happy or you think that today is a good day, and then yeah, you need to be in the right state of mind. But one thing I want you to understand is this: when you want to profit from the market, such things don't really apply. Implement your system where it needs to be implemented. Follow the rules of that plan. Eventually, money will be made, right? And then what I want us to talk about is sorry about this. What I want us to talk about now is what are the benefits of having a trading plan? It increases consistency and discipline, right? Discipline, a significant role that every trader needs, right? You need to be a disciplined individual for you to grow, meaning that if you have a plan, follow the plan, man. Guys, I'm not gonna come here and act like I'm a perfect one. Listen, when you start, it's not gonna be as simple as it is on the book. You're going to struggle, right? Because of you are used to your bad habits. So what you need to do now is this: take this thing step by step. You are consistently improving your discipline, right? You implement this thing on a regular day. You pitch up each and every single day. You do exactly what the system tells you to do. You eventually get good. There's no such thing as I'm gonna watch tomorrow JPY's video and then eventually profit from the market from this setup from now until forever. You need to do this thing step by step. It can take you a month, 2, 6, 7 year, or whatever. All you have to do is just to know that I have to remain consistent and disciplined in implementing my trading system, right? Another thing is that with a plan, it helps you to trade mechanically or systematically. What I mean by this is this. You know the pair that you're gonna be trading. You know the lot size you're gonna be using. You know each and every single thing that needs to be done for this thing to become true. Guys, listen. Everyone is bound to become profitable. Everyone has the highest chances of profiting from the market. It's just that you guys want to do things for the sake of doing them. For example, you have 1,000 Rand account or 1,000 USD account. The account is on a drawdown. One morning or one afternoon or one evening, you just decide to take a trade because if you saw it using a friend strategy or using someone's signal. The minute you do that, you jeopardize the whole plan. You know, one thing I like about trading systematically is what? One mistake, one bullet. Once you make one minor mistake, the whole system is invalid. I was having a live session on Instagram today, right? And I was telling my students that, not my students, everyone who was on that live, that let me just add this thing here. Let's write this thing as a code. Let me see if they do have it. A code. They just don't have a code here. But let's check programming. Sorry about this, guys. Programming. Okay, let's just choose any of these. Excel, blah, 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 SQL. Okay, let's just choose any. This one looks good. Right. Let's just take this and then put it here. So I want us to talk about this, guys, right? If you build a code, right? For those of you guys that are studying IT, you know that once you make a mistake on your code, the chances of the output of that code to be right, they're very low. Right. The same thing with trading. Once you make a mistake in your system, your chances of you profiting, they're very low because of the day you put your stop loss closer, or you reduce your stop loss, or you reduce your lot size, or you increase your lot size too big, it's the minute the whole plan is jeopardized. So, like I said, our main objective is to implement our system without making any form of error. Meaning that you don't want to find yourself in a situation where, when you are taking three back-to-back losses, you are this type of individual now. You want to scale down for no reason. You are an individual who's now fearful of their setups. You are now an individual. You see, you're coming with a lot of things at the same time. So our goal is to trade mechanically and systematically, in a way that we know that we are gonna be making less mistakes, and then we are going to be implementing our system to its fullest potential. Okay. It helps you move emotion of fear and greed from decision making. That's actually a fact, man. With a system, like I said, a system has to have a plan actually. It needs to have what do you call this thing? everything combined together, your risk to reward, your probabilities and everything, right? You'll know that, okay, even if, man, I take 10 losses, I mean, I take 8 losses. If I win 2 trades, I'm still gonna be on the winning side, right? So those are some of the things that are very important that I want you guys to pay most of your attention to when it comes to risk management and understanding that building a plan has good benefits next to it, right? So moving on, let's talk about you're done with the plan. So you build a plan, you execute your plan. Now comes this part, the journaling side of a plan, right? A journal is a detailed record of a trader's activities. A trading journal is responsible for helping you refine your progressive system, review your trading skill, and allow you to manage your risk, emotion, and align your psychology. This is nothing but a fact. Why? Because of if, like I said, a journal is basically what a detailed record of what you do within the markets. You execute your plan, make mistakes, do whatever that you do, but make sure that you record each and every single of those things, right? Now, what you do after that is this. You go and review what is it that I've been doing? How have I been doing this thing? When have I been doing this thing? Why have I been doing what I'm doing? When have I been doing what I'm doing? And then what is the solution behind this thing, right? Like I say, the major thing that I like about having a journal is that you get to actually do what? You get to actually understand your what? Your strengths and weaknesses. You know your strengths and weaknesses. But now your major objective is to make sure that your weaknesses decrease and then you capitalize more on your strength. That's something that you want to do what? Invest most of your time on. If you make most of your money in the agent session, now you need to make sure that every day agent session at this time, I'm awake, right? If you know that after making $10,000, you have a tendency of going back into the markets. Now you do what? You start calling your friends. Can we chill? Then you know that half of your day is gone. You have the lowest chances of doing what? You have the lowest chances of actually implementing your system again and making those trading errors, right? So those are some of the things that I like with a journal. If you have a lot size problem, now your journal will tell you that, okay, listen, you lost most of your money at this time because of you increased your lot size by this amount of capital. Hence why now the account and your emotions changed, right? So those are the things that you need to understand as an individual that if I want to grow, if I want to move from point A to point B, I need to have a channel, right? So yeah, like I said, I'm not gonna disclose a lot of things in terms of journaling applications or some of the things that you can use to make your journaling simple and seamless, right? But just have a journal. And then a scaling up plan. Like I said, a scaling up plan is a technique or strategy that outlines how a trader will systematically, guys, systematically note that this thing only exists if you want to scale up or scale down your account. This only exists after suffering a high amount of losses, right? Or after being consistent in making, I don't know, whatever amount of capital after maybe 3 months, right? This can only be activated when that, right? That outlines how a trader will systematically increase or decrease their trade size, capital allocation, or account exposure as they gain experience, confidence, and profits, still managing while they're still managing that risk effectively, right? Like I said, your journal will tell you that, okay, Tumelo, you're taking a high amount of losses at the moment. So what you need to do now is to scale down your trading account. So I have to have a technique on how I'm gonna be scaling down my trading account. Let's say I'm funding 1,000 USD, right? I'm funding a thousand USD, right? And then I can see that, okay, I keep growing my 1,000 USD after maybe let's say a series of 10 trades, right? After over a series of 10 trades. Okay, now what am I gonna do? I'm gonna scale down my trading account by either reducing the lot size or I'm going to be doing what? I'm going to reduce my account balance in general. Right. So that's how you scale, one of the ways that you can scale down your trading account, right? But the same thing with making money. If you find yourself making not even money, it's not even about money. If you find yourself implementing your system without making any form of error over a long space of time, maybe let's say 3 months has passed and you are killing it, right? You can scale up your trading account from $1,000 to maybe $2,000. And then from there, what is that you do? You increase your lot size by a specific percentage, and then you keep implementing the same thing. You get comfortable, you keep increasing. Get comfortable, keep increasing. You start seeing that, okay, ish, this 5 lot now is killing my account, and I'm not as confident as I was, or I am closing my trades early, or I'm panicking. You scale down your trading account to the past system that was working. You get used to it, and then you scale up. It's as simple as that, man. Right? And then moving on, we have what now? We have probabilities, right? Let's talk about probabilities, right? Like I said, it's a mathematical way of trading. is a mathematical technique that is used by most traders. So this is where we're gonna be having some sort of a tasks together and then discussing some things, right? Okay. Probabilities in trading is basically what? Probabilistic mindset, right? When you talk about a probabilistic mindset, what is it that we're talking about exactly? One thing that I want you to understand is this. In trading means approaching the market with the understanding that no trade is guaranteed to win and that the outcome are uncertain, but patterns, edge, and probabilities can be used to make money over a space of time. Guys, one of the best way you as an individual can grow is by simply implementing this technique, trading from a probabilistic mindset. What exactly am I saying? It's saying that nobody knows which trade they're gonna win or lose. That's actually a fact. Nobody knows nothing about trading, guys. Another fact. If you find someone telling you that their strategy is the best, blah, 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 they know the market maker, they know they're trading with banks. See, those types of individuals, tell them that Dumelo Jaipua says that they are lying. Why am I saying this thing? It is because of if they are saying that they're trading with banks and they know the market maker, blah, 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 and everything, why are they then taking losses? Why are they then taking losses? But now, if you trade with me or you trade with my community, you will understand that we know that we don't know if this trade that we're about to execute is going to be a win or a loss, but we are willing to implement our system because of this probabilities next to it. There are chances that this setup can be a win. If it wins, we are taking this amount of profits. If you're losing, we are going to be losing this specific amount of capital. So it's nothing huge for us, right? All we do is implement our system each and every single day to find out if the trade that we are actually taking now is going to be a win or loss, right? This is what we are trying to do. This is what we are trying to build as traders, right? There are ways that you can make money in this trading thing without even knowing where the market is going to go by simply understanding the numerical or the number side of things, right? Okay, now I want to talk about a trader and a gambler. I always ask people, who is more profitable between a gambler and a trader? Then I give you like 5 seconds, and then you're gonna lock in your answer. Five, four, three, two, one. Okay, you have your answer, you wrote your answer, whatever, you have your answer in your head. Before we actually get to that side, don't forget that 97% of the traders are not profiting, right, from the market. We talk about consistency and profitability here, right? 97%. So with this rate, I automatically gonna believe that gamblers are way better than traders. Why? Because of think of gambling in this way, right? A gambler's mentality. When someone goes and go to maybe a casino or something and they tell you that, okay, they're going to gamble. Listen, this is what I think most of them do. They come with a specific amount of capital, right? But the only error they do is some are coming with their money that they're not willing to lose. But sometimes the outcome can be the same, sometimes the outcome can be different. Just gonna give you guys what my 2 second, what do you call this thing? My 2 cents um view on this thing. Listen, you come with $1,000, right? And then you tell yourself that, okay, on this $1,000, I'm gonna be risking $100 per bet that I'm gonna be taking, and then I'm going to be maybe let's say your risk to reward, you're risking this amount, and I'm going to be making maybe let's say 500 USD per win, right? That's what they do. This is their plan. Right. And then they have a psychological mindset. Their psychological mindset is basically them telling themselves that they're going to take each and every single bet that comes their way. They don't know which bet is going to be a win and which bet is going to be a loss. All they're doing is predicting. There's no pattern behind this thing, right? They know that there's no sequence amongst their bets, meaning that if they've won the previous bet, it doesn't mean that they're gonna win the next bet. If they've lost the previous bet, it doesn't mean that they're gonna lose the next bet because of the outcome is random. Don't forget that. And then they also know that if they win, it's not them that they won. It's not them who actually won. It's maybe let's say it's the machine giving them a win. Because there's no way you can prove that I actually won because of the following reason. Right? There's like literally no way. Like no way you can prove that. Even you can't prove why you won your past trade. And if you can prove to us why you won your past trade, why are you not winning over and over again? Right? So it's that. So why do I like a gambler's mentality? It is because of some, they come with the amount of money they're willing to lose. They get in there, they get the job done, and then they leave. The only thing that they suffer from is over. over gambling, and then you can't have fear, man. You can't have fear when you gamble, personally. But now the problem with traders is this: they contradict themselves. They say that they are risk takers, but they normally find themselves in what hiding themselves behind what their analysis, which means you are using your analysis as a solution. You think that since you've made analysis, your trade should be a win, right? You think that since all the analysis is an A setup analysis, your trade should also be a win. That's not how this whole thing works, my good people. One thing that you need to understand as a trader is this: you can't always be using your analysis as a getaway car, right? You need to understand the psychological part of things. Guys, you see, I'm discussing risk management, but look at how important the psychological part of trading is, right? So we are going to be implementing the gambler's mindset now, right, into trading. We come with the money that you're willing to lose. We come with a plan. We come with a solution, and then we just get there. We get the job done, and then we go home, right? So how do we do that? We do that by going through the flipping coin theory. Just gonna give you guys an example of what this whole thing is all about, right? A flipping coin theory. So a flipping coin theory is something that is quite simple. So you're going to it's two ways. It's for flipping the coin and it's for trading also. You're gonna start with this thing in this side. You're going to have a series of flips, meaning that I'll always recommend 10, right? 10 series of flips. When you flip your coin, you must have a series of flips. Let me just remove all of this from the side. Okay, let's do this actually. Let's do it like this because it looks fine now. Okay, you are going to have what? A series of flips. Maybe let's say 10 flips, and then the risk to reward is gonna be fixed or not. Guys, risk is not fixed. A risk can either be fixed or it can be setup based, meaning that you can tell yourself that when you say fixed risk, you are saying that I'm going to take I'm going to risk 1% of my account to make 10%, which means if you go to your trading history, this is what you're always gonna find. 1% risk, 10% made. That's it. You don't want to find 6%, 8%, 9%. The changes of this whole thing here, this number can fluctuate, and this one also can be changed. They are fixed, they are constant, all of them, right? And then when it comes to the setup based, it can also be fixed setup based, or it can be a setup based type of what do you call this thing? Risk, meaning that if you're telling yourself that you're going to be buying on a demand, right? Let's say you're going to buy on this demand. You're going to buy here, and then your take profit can be here, right? With fixed, if this area here is 10%, you're going out. But with setup based, you have to hit your take profit. But you can also risk 1% on the demand, right? To make 10% as an overall. You see, just more likely to be the same thing. And then you're going to choose your side. This was for trading, guys. You're going to choose your side and then your risk to reward, right? Okay. So now let's get back to this whole theory here, right? Now, what is that you're gonna do? You're gonna look for a coin, either 2 rand, 3 rand, whatever country you're in. Look for a coin. Please do this thing with me, right? You're going to write 1 until 10, and then 1 again until 10, and then 1 again until 10, right? Which means there's 2, 3, 4, 5, 6, 7, 8, 9, 10. 2, 3, 4, 5, 6, 7, 8, 9, 10. 2, 3, 4, 5, 6, 7, 8, 9, 10, right? What are you gonna do? You're going to choose your side. That's what you're going to do. You're going to choose your side. So before you flip a coin, you choose whether you want head or tail, right? So let's say for the first one, you say head. I'm not sure if I have a coin around me. Let me just look for it. But I'm not sure. Yeah, I do have a 10 cent here. Yeah. So I have a 10 cent here. For those of you guys that are in South Africa, they don't know what a 10 cent is. It has a head and a tail. So which means I'm going to choose my side. I wish you guys could see. I'll work on getting myself a webcam. You're going to flip a coin, right? After choosing the side. For now, I'm choosing head. Then I'm going to flip the coin. That sound is the sound of me catching the coin. So let's do it again. I'm choosing what? Head. Then I'm gonna flip my coin, right? Just flip your coin, and then from there, you're going to record, which means I chose what? Head. And then you're going to choose what do you call this thing, your risk to reward. Before you do anything, choose your risk to reward also. So I'm gonna be working with 1:10. We are checking probabilities now. We are working with probabilities. This is a probabilistic mindset, right? 1:10, right? Which means I'm going to be losing 1%, and then I'm going to be gaining 10% or 10R, whatever that you're agreeing on. And then you're going to flip this coin 10 times for the first time, right? And then you're going to do this thing again and again. Once you are done with that, which means, let me just give you like for the first 5 example, right? For now, I'm gonna choose my side. My risk to reward is 1:10, and then I'm gonna choose my side. I'm going for head, right? It came as a win, which means I'm going to write here plus 10, right? And then I go again. What side am I choosing? I'm choosing tail, right? I flip my coin, and then it came as a win again. That's plus 10. And then I go again. I flip my before I flip my coin, I ask myself, what is it that I'm choosing? I'm going for head, right? And then it looks like I'm winning this thing too much, right? That's a win. And then from there, I'm gonna choose my side again. Which side do I want? Head or tail? Just gonna go for tail. Let me flip my coin again. Oh, I won again. Right? The results won't be the same. Right? I'm gonna show you which side do I want. 5. I'm going to go for head. I'm gonna flip my coin. I'm gonna flip my coin. That's a -1, right? I'm gonna do the next 5 now. Let's say 2, 3, 4, 5, right? Which side am I choosing? I'm choosing tail. I'm gonna flip my coin. Okay, it came as a win, right? I'm gonna do this again. So you have to do this 10 times. Don't forget that. You're gonna do this thing 10 times. Um, which side am I choosing? Tail. That's a -1. And then I'm gonna flip my coin again. Which side am I? Okay, let me choose a side first. I'm gonna choose head, right? I'm gonna flip my coin. That's a -1. And then the fourth one, I'm gonna choose my side again. I'm going for head. Okay, I won here, plus 10. And then for the fifth one, I'm gonna choose my side again. Maybe let's say I'm going for tail now. And then I won on this one, right? And then let's go for the last one. So you have to do 10 times, don't forget. You have to do 10, 10, 10. I'm just doing this thing to show you that the outcome of each individual flip is random. There's no way you can predict that this thing is gonna be this way. And you can see that there's no relationship. Here there is win, 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 right? This is a win pattern. But here there's win, loss, loss, win, win. You see, you can't build, there's no sequence or there's no pattern or relationship amongst the outcome of each individual setup, individual, what do you call this thing, flip that is coming out, right? And then this one, I'm gonna choose head. Okay, came out as a loss. This one, I'm gonna choose head again. Came out as a win. And then the next one, I'm gonna choose tail. Came out as a loss. And then this one, I'm gonna choose head. Came out as a win. And then the other one, I'm gonna choose what? Tail. Right? It came out as a win, right? So after doing all of this thing, right, you're going to, this is gonna be group 1, group 2, and then this is going to be group 3, right? These are going to be the 3 groups that you're gonna be focusing on. Now, what you're gonna do is you're gonna look for your win rate. Win rate meaning that the amount of flips that you've won after 10, right? So which means you're gonna have this thing 3 times also. Another one here and then another one here, right? And then you're going to find out the amount of your lose rate, the trades you've won, the trades you've lost, right? And then from there, what are you gonna do? You're going to check what was the total amount of capital that you've lost, the total amount of money you've made, and then you're gonna take the loss, subtract it from the money you've made, and then you're gonna look at your profits, your take home, right? Why am I doing this thing? I want you to look at yourself when you flip your coin. You are not scared. You are not feeling anyhow. You are just yourself. You are doing this thing freely. You are not even thinking a lot about it. You're just flipping it for the fun side of flipping it. That's how you're going to be profitable by simply implementing your trading system without making any form of error, doing this thing effortlessly because of you know that if I win by just 10, even if you choose 1:6, anything from 1:5 to 1 is to whatever amount of capital that you want based off your setups, right? You know that even if I were to lose 6 times, if I win 2 times, I'm still gonna be on the winning side, right? So the same thing with the trading side. I want you to implement the same thing. 10 trades, fixed risk or whatever, the pair that you're gonna be trading, your fixed lot size. Here you need a fixed lot size, right? And then a fixed funding also, right? You also need what? A fixed funding. You can't fund 500, the next day 200, right? And then you're going to be executing 10 trades without making any form of error, right? When you flip, it's you buying or selling based off the setup. So the setup tells you to buy, you buy. The setup tells you to sell, you sell. And then from there, you gather your information. You will know your win rate, your lose rate, the amount of money that you have risked in general, the amount of money you've made, and then how much you've made out of those things, right? From there, you are going to make what you call calculated, you're going to become a calculated risk manager, meaning that if you have a 60% win rate as an average on all of these things here, you know that okay, 60% is the way to go. Now you know that if you had to execute 10 trades, six of them, they're gonna be winners. And then four is gonna be losers, which means already if you are funding 1,000 to make 10,000, you have 60K guaranteed, but you don't know when or which trade is gonna be a win or which trade is gonna be a loss. But you have to execute each and every, guys, I'm giving you powerful information. Let's call this thing a night. But just do as I tell you because of I can feel myself that I'm sharing things that are not supposed to be sharing. But follow this process, get good at it. You will eventually become profitable. And I, Dumelo JPY, your mentor, I'm signing out. This is too much. This whole theory is just too much. But take care and Kanye.